Hey there! Thinking about buying a home but feeling a bit overwhelmed by the word mortgage? No worries, I'm here to break it down for you in just 3 minutes. Let's dive into the world of mortgage interest and make it super easy to understand. So, what exactly is mortgage interest? Simply put, it's the cost of borrowing money from a lender to buy your home. When you take out a mortgage, the bank or lender gives you a big sum of money, which you agree to pay back over time, and in return, they charge you interest for the privilege. Think of it as a rental fee for borrowing their money. Now, there are 2 main types of interest rates you need to know about: fixed and adjustable. A fixed-rate mortgage has the same interest rate for the entire life of the loan. This means your monthly payments stay consistent, which can be great for budgeting. On the other hand, an adjustable-rate mortgage, or ARM, has an interest rate that can change over time. Typically, it starts off lower than a fixed rate, but it can go up or down based on the market. So there's a bit more risk involved. Okay, but how is your interest rate determined? Lenders look at several factors, including your credit score, the size of your down payment, and the current market rates. A higher credit score usually means a lower interest rate because you're seen as a less risky borrower. And a larger down payment can also help lower your rate because you're borrowing less money. Next, let's talk about amortization, a fancy word for how your mortgage payments are spread out over time. In the beginning, a larger portion of your monthly payment goes towards interest. Over time, more of your payment goes towards paying down the principal, or the actual loan amount. This is why it's common to feel like you're not making much progress in the early years. But hang in there. It gets better as you go along. One more thing to consider is the loan term, how long you have to pay off your mortgage. The most common terms are 15 and 30 years. A 30-year mortgage usually has lower monthly payments but costs more in interest over time. A 15-year mortgage has higher monthly payments but saves you a ton in interest. So it's all about finding what works best for you and your financial situation. All right, let's wrap this up. Understanding mortgage interest might seem daunting at first, but remember, it's just the cost of borrowing money. Keep an eye on your credit score, consider your down payment size, and choose the right type of interest rate and loan term for your needs. With these tips in mind, you'll be well on your way to mastering mortgage interest. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit that notification bell so you don't miss out on more tips and tricks for homebuyers. Happy house hunting!